Okay, hello guys. This is Ray from Next Forex Trade here. Just redoing this after doing a good 30-minute session there. I realized I wasn't recording. So live and learn. I'm going to record this again just so that we've got today's version live for everybody to hear and rewatch. So I'm going to start with the trade position that I took on the AUDCHF, just explain the rationale behind that, and go through some of the other pairs as well, giving my opinions on how they could be tradable. So firstly, we've got the AUDCHF here. So I'm going to remove some of these. If you're not familiar with my method of trading, basically I use these 5 different time frames, starting with the daily, 4-hourly, hourly, 15-minute and 5-minute. And the process is to look at the daily first to see whether there is an opportunity to trade. If there is, then I look to the lower time frames to help with the timing of that trade. So in this instance, we've got the daily chart here. And what I have around this is a standard deviation channel. So standard deviation is to help me decide whether the price is overbought or oversold. So at the moment we can see what I'm capturing in the daily is this downward move, and it's interacted with the upper channel, which is giving me some indication that the price, I'm just going to move that line there, some indication the price could be oversold. Now you may have noticed as well I had this kind of linear regression, standard deviation channel around this movement up here as well, which could be deeming this as an uptrend, or in this instance really a retrace to this move. You can see it's like a tick. The market, when a price trends, it will extend and then it will retrace, it will extend and it will retrace. So this here, what I'm deeming is that it's a potential retrace. Now it could of course continue upwards and start trending with higher highs and higher lows, but what I'm trying to do is read the market and position myself around what I'm seeing, excuse me, to enter the trade. So my decision on this is that we're seeing that this is overbought here. Another thing to support that is this horizontal here. So it's overbought because it was interacting with the upper standard deviation channel, and it's hit resistance, potential resistance at this level here with these previous highs in the candles on Friday and Thursday. There's kind of a soft resistance here from previous price levels. It's definitely a zone that I would just anticipate the price has trouble moving much higher. And as you can see, this dotted line, red line here, so I'm going to move this purple line now. This dotted, come on, didn't want to do that. All right, one sec. This dotted red line is my stop loss, and this dotted red line is my take profit, and this green line here is my entry. So I've put my stop loss above this resistance zone. Now the reason for the choosing that is, there's manifold. Basically, it's above our standard deviation channel. So should the price move and start to make higher highs, I know I'd be wrong on what I've assessed in the market. So it's a good time to be out in the market. It's also above what I'm anticipating is a lower high in this downward move. So again, same rationale. I'm out if I'm wrong. My take profit is based on where my stop loss is, because I've put this at 1-to-1. I'm extrapolating that and saying I want my take profit to be the same distance away. So other reasons to justify this is just looking through on the lower time frames, how I position this. And what are we seeing on the 4-hourly? So this, and you can see at the moment the price, the position has gone into a loss, which I'm not too worried about at the moment, because overall it's still doing what I anticipate it to do. It's not going to move in a straight line to hit my take profit or stop loss. That very rarely happens. It kind of oscillates around, and at the moment it's still doing what I'm anticipating. Now, just looking on the 4-hourly, what had happened here is we did have this standard deviation channel. The price had broken through that, like breaking through support on a trend line, and it looks like it's been finding resistance off of that. So that's another thing to help put weight behind shorting this. Now, it's not perfect at the moment. One would like to see more clearer movement. Go away. Clearer movement lower, but obviously I'm positioned well enough on this. Now, you could be thinking of this in terms of what I was saying of lower lows and lower highs, of taking a position where you've got a stop loss above this type of level. That would of course mean that your profit target, it wouldn't have to go as far. Now, that is one way of doing it. It's not a way that I would trade, because as I mentioned in one of my other videos, I like the concepts of outs. So like in poker, where you've got different ways to win, you've got more, if you have more outs, you have more combinations that you can win. And in this instance, having a stop loss above this type of level and anticipating 1-to-1, it's there are fewer ways that I can protect my capital in that way, because what could happen is the price could come down, move slightly lower, come back, take out that high, and even though it had taken out that previous high, I wouldn't be wrong in the context of the daily, right? Because I'd be wrong in the context of the daily if it took out this high, these previous highs, which is much lower. It's still in this kind of channel here around it's a lower level. So I could be right overall on direction, but wrong because I've been stopped out too early. So I prefer to have my stop loss at a level that clears on as many time frames as possible that kind of danger area, and allows me, although it may take a longer period of time to reach, it allows me to reach that potential take profit in a more probable way, and a less risky way, is a way I deem it. So that's why my stop loss is up here rather than above here. Of course, needs a bit more patience to come to fruition, but it's just a more risk averse way to trading, but it's just a better way to protect the capital. So yeah, we'll just see how this one progresses. I'll come back and give an update on this either tomorrow or once it closes out. And yeah, if there's any questions on this approach, just let me know in the comments below, and I can explain that a bit further. But it's all entirely based on price action. There's no indicators that I use in this approach. There are the tools that I use as a standard deviation, sometimes Fibonacci retraces and extensions, but no indicators or moving, like moving averages, RSI, Bollinger Bands. The reason that I don't use those and focus pretty much solely on price action is because a lot of those indicators are derived from price in any case. So if I can see what the likelihood of something happening in the price could be and just position myself around that, it's enough. There's enough context to make a trade off of, and having lots and indicators clutter the screen and potentially talk you out of a trade isn't a way that I like to trade. This is having tried a lot of different indicators and a lot of different methodologies. A simple price action based strategy is being what's most useful for me. Certainly, if you do want more tuition on this, one-to-one coaching is something I do on a one-to-one basis over Skype or Zoom. So visit the site nextforextrade.com or click on the link in the description below, and certainly I can help you learn more about that on a one-to-one basis. But these videos are here as a free way for you to come up to speed with how you could trade Forex to improve your profitability. But what we'll do is have a look at some of the other pairs, and I'll give my thoughts on them as well. Just see how long. Okay, it's 10 minutes so far. So I'll go through these and just give you my insights into how I might or might not trade them and what I'm particularly looking at. So as I said, the first thing I'm always looking at here is the daily. This pair in particular is looking good. We've got downtrend, lower lows, lower highs. It's the upper edge of our standard deviation channel, giving indication that it could be overbought. What isn't right for this for me at the moment is what the lower time frames are saying, because we can see this upward movement. If we're looking to short this, we want to see signs of bearishness on all these other time frames as well. 4 hourly at the moment is clearly in a, it's trending up with our higher lows and higher highs, and it hasn't shown any signs of breaking price structure. For me to consider this, really what it would need to do is break this kind of level here, the previous higher low. You can see on the hourly as well, it's a bit easier to see. I mean, that area as well, if we put a horizontal across this, it was an area, or is an area, where there was previous resistance, and you can see support coming off of it, soft support as well. So the price breaking that region would be quite significant. It would help bring weight to the decision to short this, based on what the daily is saying as well. So should the price break this kind of level, this would be something to consider worth shorting. It would also have broken through the standard deviation channel as well. So there's multiple confirming factors if that were to happen. Of course, that's all speculative until we see the price break that. I would anticipate if that were to happen, it probably wouldn't be until later this evening based on UK time, or perhaps tomorrow. Let's just have a look at some more. AUDJPY we've already seen. Okay, so this pair here, what we're seeing pops out for me on this is a lot of resistance on the daily. So seeing these highs here, it's having a real trouble. It's just approaching it as we speak now, but this area here, we've seen interactions with this level. How far back does this go? So even to back here as well. So I'd anticipate that the price will struggle to get through that level. Now, that isn't necessarily a reason to short just based on that, because of that level, but there are some other confirming factors as well. It is in the standard deviation area. My thoughts would be, if it does actually pass through this level, it will probably be quite a strong break before pulling back, or it will just fade away. So if you were looking to fade this, so fade is going against the prevailing trend, what I'd need to see is signs of bearishness in the lower time frames. Don't really see that on the 4 hourly, not on the hourly, not on anything really at the moment. All these are saying is that there's a really strong level, and there's a slight bias to the upside. So to even consider shorts on this, the kind of levels that I would want to see the price break would be around here, the 7.5 spot 7.7, or even this, even more conservative would be around here, 7.5 spot 4.5, just to see it break through those and then ideally pull back. And what we would see is a standard deviation channel that goes down rather than up, right? The price would encapsulate it going down. So this is a pass for today. Now I tend to just have one or two positions open at a time on any one day. This for me, I mean that this would be a pass really. I mean, this it's a bit in limbo. We could be looking at this as the downtrend in the sense of lower highs and lower lows, or you could be looking at this in terms of the uptrend, which is echoed what we're seeing on the 4 hourly. Either way, there's not enough information to give a decent timing on this. So this would be a pass as well for me. This is a bit too choppy, so very sideways market, so there's no definable up or down in terms of the trend, so I'd pass on that. This is better in terms of setup. We can see the daily has got clear higher highs and higher lows. You've seen a reversal off of the standard deviation lower channel. So good positioning would mean that, you know, if we were to enter this, our stop loss would be under here, meaning that you know, depending on what the entry is, it's probably going to be a take profit before these type of levels, or at least before the upper standard deviation channel. So really what needs to be seen is signs of bullishness on the lower time frames. I mean, the 4 hourly, I can't really read. Ooh. Okay. So the reason that I've got this here and this here is what I'm looking at is this is the uptrend and this is the retrace. And the reason I've got this kind of alert here to see if the price breaks that high is it would fall into the narrative of this potentially going higher, right? Because in this downtrend, if these are lower lows and lower highs, then this is a lower high. If the price breaks higher than that, then it's saying that it's not making lower highs anymore. It's potentially making higher highs. So that is a kind of a pivotal area for the price to break higher and consider going along on this. It's also a previous area of support turned into resistance. So the price moving past that would be a good sign to be considering going long. Also, in terms of this upwards channel that we're seeing, which is the first thing that we saw on the daily, the standard deviation channel is in an oversold area, so it's good value for money in terms of potentially going long on this. So I'm bullish on this, but it's not quite right. I would need to see the price break past these highs, or these highs here, same thing, and ideally pull back and see better value for money. So one way you could play this, if you are looking at this, is to watch this kind of level to see it break and then pull back and find support off of the lower edge of a standard deviation channel. So either on the daily, on the hourly or the 15-minute, you could be considering that. Yeah, but it still needs to break that kind of level for me to make that viable. Okay, so this one's a bit too late in terms of value for money. Yeah, so no. Let's turn off this alert, one sec. And this is the thing, if you've got a decent position in, you've done your research on it, you're happy with your you know, you've got your potential risk out there that you're happy for the day, that's all you really need. You don't need multiple trades on at the same time, especially when it comes to potentially trading pairs which are either correlated or negatively correlated. You could be doing, you know, more damage than good to yourself. I discussed this, I think, on Friday, but it's something to avoid. If a currency moves in a very similar way to another one, then if you've got 1% in one currency and 1% in the other in a trade, or sorry, 1% in one pair and 1% in another pair, and they move in a very similar way, then you've doubled your risk. So you're not really trading 1%, you're trading 2%. So similarly, if currency pair moves in opposite directions, so they're negatively correlated, it means if you're long in one and short in the other, then they is they start moving, you've effectively doubled your risk. So you need to think about that. And the other situation is where they, you know, you've got something that's correlated, and for whatever reason you've gone long one, short in the other, then you're kind of breaking even. As one moves one way and one moves the other, then you're not making any money because one cancels the other out. So there are sites where you can find what the correlation of currencies are, but I would say starting out, it really does help focus as well. If you just look at one currency at a time and just have that as the one that you trade, rather than attempting to have, you know, loads and loads of positions on at the same time, which mess up your you know, your overall profit and loss. I think of it as, one way that I explain to my clients is to think of it as being like when you're on a bike, and if you've got the bike in the wrong gear and you're pedaling really, really, really hard, it's a lot of effort to get nowhere. You know, you're pedaling really hard, you're putting in all this energy, so it's like trading a lot, you're over trading, and your movement isn't that much. Whereas when you've got the bike in gear, and you know, you've got a more efficient movement, you're pedaling less, so you're doing less overall, but it's a more, you know, focused in gear kind of energy that you're using to help you get from where you are to where you want to be. It means you're doing less, but you're effectively moving further. So just think of that in terms of picking the right trades and not having to overtrade. So even if it means passing on a day and not trading anything, that's a good decision. It means that you're not wasting energy, not wasting your capital on things that are gonna you know, potentially increase your losses over the long run. But yeah, okay, so let's just have a look at a few more. Let's see how I'm doing on time. Just have a look at a couple more and give you some thoughts on those. So this one here, it's for me, it's too near the mean here. It does look like it's, you know, I'm bearish on this overall, but the timing on this isn't great. It would need to pull back to give some more value for money. Similar thing here. It does look like it's meeting a lot of support, but the position of the price on the daily at the moment isn't great. This is, you know, overall bearish on this, but it's just overextended. It'll be too expensive if you like to short this at this time. It needs more value for money, so it needs a pullback. This is not really trending for me. In a trend, there needs to be definitive higher highs and higher lows. And although this is one move like this that is going up, it needs to be those highs and lows need to clearly extend and pull back, extend and pull back, kind of like what it's doing in the 4 hourly, and you know, low time frame, it will be more apparent as well. Even in the daily, in the hourly here, where we're seeing this kind of move here, up, pull back, up, pull back, up, pull back. The highs are clear. The lows here are clear. I'm not seeing that in the daily. So for this to be tradable, it would need to pull back. It's kind of break that area of support that it's got there, pull back, make a clear retrace, and then go forward. So as that's not there at the moment, I would pass on that. This here, no, it's not great value for money. If I fade traded this, so fade is going against the trend, this could be of interest because of what I'm seeing in the price action here. The way it's found support on this level, it's the mean of the standard deviation channel. It's found support here previously at this level, and if we take it as a zone rather than the actual price, then we could deem this kind of well, no, this area there, let's see how far back that goes as well. Would be risky in my opinion. I wouldn't risk, I'd definitely be risking less than 1%. so maybe 0.5% on a position like this. So yeah, it's found support. There's signs of reversal on the daily. The 4 hourly as well. It's kind of like a double bottom, which is clear on the lower time frames as well. These lower time frames here, 5 and 15, are starting to show signs of upward higher lows and higher highs and higher lows. So viably, you could consider trading this with a stop loss underneath this level here, where we've seen that support, and going for a 1-for-1. It would, it would take your profit targets around here. Definitely wouldn't consider any take profits beyond this level here, because what we're saying, if that's what you're considering to happen, to move past this level, right, where we've got this previous lower high, then you're saying that potentially the price is doing a reversal rather than a retrace. The price is in fact no longer being a downtrend with lower lows and lower highs, but it's turning into a uptrend with higher highs and higher lows. And that's just it's just more difficult for that to happen. It's easier to trade, from my experience, it's easier to trade with the trend in the same direction of the trend rather than trying to catch the retraces. It also helps a lot with risk management because of where your stop loss can be placed. With this, we're putting it underneath this support area, which makes sense, but it's going counter trend. So for us to we're kind of guessing more on how much that retrace could be. Whereas if we're taking a short on this and we got a clear indication of where we're wrong, above a standard deviation channel, upper channel, above a lower high, then when we're wrong, we're wrong. Whereas with position like this, when we're wrong, we could still be right overall in what happens, but we've just been stopped out too early. So yeah, that's one approach you could take if you were a fade trader, but I would definitely suggest losing a lower amount of risk than would do in a trend-based strategy. This here is too oversold. You can see it's past that mean there. It's just too expensive to consider shorting at the moment. Let's just do a couple more. Euro is it's just too flat at the moment for me. Not really tradable. Too late on this. Potentially could have shorted this. I had seen this earlier, but no, it's not great value for money. This one is how do I explain this one? Yeah, this one is tradable. I mean, we can see that we've got some downward movement to define this as a downtrend. It's kind of hugging the standard deviation mean here. Ideally, what you want to see is to interact with the upper and lower edges as it kind of oscillates within that channel. But sometimes it's just reading the context of it, and here we're seeing trending movement, but it's just hugging the mean rather than going to the extremes of standard deviation. So that is tradable. We've seen a reversal candle off of this level, which was previous resistance as well. Just see if that goes back anymore. It was previous support around these levels. Sorry, around here. So it's more zonal beyond that. So there's enough information to at least consider that this, above this yesterday's or Friday's high, it could have some trouble moving past. Now, what also kind of stacks up on this is on the lower time frames, we have started to see lower highs and lower lows as well. So let's get my standard deviation channel out here. So I'm just looking at the hourly here. This would be interesting to see how this closes on the hour. So what I would anticipate is that the price starts to fall away from this level that it's at now, because you can see it's kind of hitting an extreme. And the way I would position this is looking to short it with the protective stop above this level. In fact, above these highs here. So let's just say we had an entry around here. So this is just a rough eyeballing of what the price would be. This is about 12.5 pips. So all I'm doing here is just doing a rough estimate of where my take profit and stop loss would be, just to see how the trade would stack. So with a protective, say assuming an entry around about here, it would mean a protective stop above here and a take profit here. I'm happy with that take profit level. Obviously I've discussed the stop already, but this take profit is okay because it's before this previous lowest low, if you like, in this move. And in taking profit, I'd want it to be before that level, because as it reaches that level, it's likely to find support. And taking profit before support, when we're shorting, is a better strategy than having to see it break support to take profits. Because as it comes to this level, is a good likelihood that it will, at least bounce, find some support and bounce and move up slightly. When it does that, it could just completely reverse, or it could move lower. But as part of planning for that, if I'm saying I'm taking at least some money off the table before it reaches that level, then I've got a more assured way of the trade at least making some money. But this here, I may just wait for the hour to close just to see how this candle forms. And if I do take the position, I will update you in a later video or tomorrow's video. But yeah, that's it for today. What I would say is, if you are interested in one-to-one coaching, what I do is one-to-one sessions. You can just go to nextforextrade.com. There's a link in the description below. And I can help you one-to-one over Skype or Zoom. And of course, if there's any questions that you have about what I've been doing here, feel free to leave those in the comments below, and I will answer those as best I can. And feel free to like and subscribe to the station, to the channel as well. And until next time, I will see you later. Take care. Bye.